How's it going, everybody? It's Stas here. So the stock market futures are not off to the best start today. The S&P 500's down $11, down about 0.4%. The Dow Jones futures down $111, down 0.4% as well. And the NASDAQ futures are down $45, roughly 0.5% in the red. And in this video, we're going to be talking more about the markets, breaking down some technicals, and I also want to go over some key things that I'm watching out for this week in the economy, some key numbers, and in the stock market in general. And I also want to break down 7 stocks that I'm looking to buy as we're getting into the month of July in 2020. So if you guys find value in the video, as always, hit that like button for me. Let's try to get 400 likes. That's a challenge. That's a lofty number, but smash that like button for me. Let's try to get 400 likes on this video. And also consider subscribing to the channel and check out all the free links down below in the description box if you want to be further connected with the Strive Smart community, and if you want 2 free stocks from Webull valued up to $1,400. And again, all of that is linked down below, and all of that is free of charge to join. So let's start off this video going over what happened last week in the stock market. And to do that, we're going to take a look at the S&P 500, the 500 largest publicly traded U.S. companies, and we're going to go to the 5-day, 5-minute chart. And we can see clearly that last week was a roller coaster ride. We started off pretty smooth sailing on Monday. Tuesday, we bumped up to 3150, smooth sailing as well. And you guys know 3150 is a pretty big resistance, right? We failed there on the 16th, the 17th, on the 18th, the 19th, right? And on Tuesday, I was watching 3150 to see if it breaks, right? If it did break, we would have ran up to 3,200 most likely, and we can see that did not happen, right? We had a very bloody day on Wednesday. The market fell like crazy, right? You guys can see that on the 5-day, 5-minute here. We dropped like crazy Tuesday heading into Wednesday. Thursday was a bit of a chill day. We were consolidating. We had that rally up into the close, which ended up being very bullish, right? That was a bullish sign heading into Friday. And then Friday was an absolute terrible day as well. Down $75. The S&P was down $75, down 2.4%. We took out the lows from Wednesday and Thursday. We took out 3020. That was a very critical support, and we closed right around $3,009. So let's talk about some key levels here on the downside for the S&P very quickly. One of them is 2980. Notice how 2980 was a resistance back on the 20th of May. We gapped out of it. That makes it a new support, right? It was also a support, 2980, on the 15th and the 14th of June, right? This general time period right here, we held it. So now that we broke 3020, again, like we saw on the 5-day, 5-minute, S&P 500 is most likely going to fill the gap down, especially as the futures are red now. It's going to fill the gap down to 2980, and under that, we're going to see a potential move down to 2950, right? And 2950 is going to be a very critical and interesting spot, because notice how 2950, we double topped there back in April heading into May, making that a pretty big support. And it's also the 180 SMA support here on the 4-hour chart, where the S&P did end up holding back in the middle of May. So that could be where the S&P consolidates and maybe continues the rally. We're gonna end up seeing what happens, guys. Patience is key, and that is one potential scenario that could end up playing out here. And going over to the futures, now they're pushing green almost. The S&P futures down only $5 now, down 0.15%, and we're seeing that a big level even on the futures here is around 2950 to 2960. So tomorrow, throughout the night here as the futures market trades, this is definitely a point to watch out for on the S&P 500, right? Going to the 5-day, 5-minute, we can see we are slowly starting to pop up now. We were actually down a bit further. The futures gap down all the way to 29.80. Again, another pretty critical level that we just talked about for the S&P. S&P held that. Now we're starting to rally up. We pretty much filled the entire gap that opened up from the future session today. So it's going to be interesting to see, guys. Do we turn green in the futures? Do we end up testing the gap again and maybe pushing down to 29.80? These are a couple of things that I'm watching out for. And as of right now, it really does look like we're about to start pushing green here on the S&P futures. Same exact thing here, as you guys can see on the NASDAQ futures, right? We're filling that entire gap pretty much that we just opened up about an hour and 40 minutes ago. And by the way, every Sunday at 6 p.m. Eastern Standard Time, that is when the futures market opens. So you can see the S&P futures, the Dow futures, NASDAQ, gold, silver, pretty much everything, right? Crude oil, natural gas, whatever future you want to look at, you can pretty much see it, right? So NASDAQ's filling the gap, S&P's filling the gap now, and the Dow Jones is pretty much doing the same thing, but that does not mean that we're in a downtrend or we're in an uptrend all of a sudden on these mini time frames quite yet, because the downtrend is still intact on all of the major indexes on this 5-day, 5-minute. But you guys know, on a macro scale, the NASDAQ is actually at a pretty decent spot, quite honestly. We're going to be testing 9,700 this week, 9,730, 50. That could be a potential support on the NASDAQ. On the Dow Jones, a major one coming up right now is 24,700, around that 180 SMA on the 4-hour chart, very similar to the S&P 500. So this week is going to be a big week, guys, right? Big week in determining the direction of the markets, especially on a larger time frame, right? Because we'll see, okay, are we going to hold these moving averages, maybe rally up, or are we going to completely bash through them? And it really relies on a lot of these data points that we're going to talk about in this video. And take a look. Gold is up $5 right now, up 0.3%. We held 1760, right? Very critical support there. We held it. We also held the 50 SMA. Now we're looking to retest out of 1790 and potentially break into the 1800 territory. That is going to be a breakout spot for gold. So let me know down below in the comments, guys, what are your thoughts on the markets? What are some key levels that you guys are watching? Now let's talk about what I'm watching out for in this week in the stock market, in the economy. And I don't think we talked about this on Thursday, but jobless claims. Jobless claims came in at 1.48 million versus 1.35 million. So yet again, another week over 1 million people filing for jobless claims, and it beat the estimation, which is not good, right? It's not good that more people are filing than estimated, right? So that's one thing to get out of the way. Forgot to mention that in last week's videos. And for this week, we know that CV, it's starting to creep back around. Cases are starting to go up. States, Texas, Florida, they're closing bars, they're closing this and that. Again, they're starting to reclose things. So this week, I'm watching this like a hawk. I'm looking at states that are seeing spikes in cases. What are they doing? Are they closing? Are they closing the businesses? Are they keeping them open? How are they handling things? And this is going to be very important, because if we do see big spikes in these states, we could end up seeing a second round of shutdowns. And we all know what that is going to do to the stock market. It's probably going to tank the stock market again, and it's going to cause the Federal Reserve to do even more and more and more money printing and more stimulus, and that's going to be pretty crazy, right? Another thing to watch out for is the quarter end and month end rebalancing of portfolios by pension funds and mutual funds, right? So this is going to be pretty huge as well, and it could definitely move the markets. A lot of these pension funds, a lot of these mutual funds that are heavy in, let's say, for example, tech stocks, maybe some of these CV stocks that do very well, like Zoom, for example, or, I don't know, Microsoft, Google, whatever. Some of these mutual funds, pension funds, they're going to rebalance their portfolio, meaning, okay, let's say, for example, a pension fund's holding Zoom, Amazon, and Netflix, 3 stocks that have ran like crazy, and they're overweight in their portfolio. They're going to take profits in some of these stocks. They're going to trim down their positions, and then they're going to add that excess cash into other positions, other stocks that are maybe underweight in the portfolio that don't have as much money in them since the other ones ran so much. So that's what that kind of means. A lot of money is going to be moving around, and this could definitely shift the markets as these pension funds, guys, these mutual funds, they're not retail investors. They're not moving $10,000, $30,000. They're moving millions, billions. They're moving so much money to the point that it really can shift the stock market, right? And another big thing that I'm watching, probably the biggest thing that I'm watching for this upcoming week, is the U.S. Labor Department's monthly jobs report, which is due on Thursday. And you guys recall, last May, and let me look at my notes here, last May, we saw a surprising 2.5 million jobs added, right? Many of these jobs were jobs that were lost, obviously, through March and April, jobs such as hospitality jobs, waiters, waitresses, so forth, right? Those types of jobs, and many other jobs, right? And you can see what types of jobs, if you just type it in, right, the labor report, you'll be able to see, what types of jobs were added. Many jobs were added, 2.5 million jobs added, right? And that was a huge beat. If you guys remember, the markets were up huge the day after that came out. So I'm looking for that this week, right? I'm looking for that this week to see what June brought about. And if this is another blow out of the park number, if this beats expectations in a positive way, the markets could ride up again. But guys, listen, if this comes out as a very, negative beat, not as good as expected, let's say, for example, on top of CV cases increasing, what else here? We're seeing the rebalancing and so forth. This could cause, more pressure to the downside in the stock market. So you guys have to be very careful and realize that this could very well shake up the market heavily to the downside or to the upside, right? And the average estimate from economists surveyed by MarketWatch is for 3 million jobs to be added in June. So keep an eye out for that 3 million number. Keep that as a ballpark number. And get this, the unemployment rate is projected to fall to 12% from 13.3%. So I believe we were at 14.7%. 13.3%, we went to that, and now we're looking to go potentially to 12%. So those are some key things that I'm watching out for this week. The CV cases, the rebalancing, and of course, that jobs report, the labor report. It's going to be massive. And Friday is closed, I believe. I have to double check, but yeah, the markets close on Friday. We have 4th of July coming up here, so the markets should be closed on Friday. I'm not sure if they're closed on Monday. I don't believe so. I'm going to have to double check, but for sure on Friday, the markets are closed. Let me know down below in the comments, guys. Quite honestly, I'm sure somebody knows. It's slipping my mind now. I should know this, but yeah, I think Friday is closed. Monday should be open. And now let's just jump into the 7 stocks that I'm watching heading into the month of July, and let's just whip right through these. So arguably the hottest stock right now in the stock market is Workhorse, guys. Ticker symbol WKHS. And this is a stock that it's gone parabolic, right? It's gone from $1 up to $10. That is a move of 1,000%. That is absolutely unbelievable. On Friday, we saw a 16% move. The stock went up $1.34. And at this point, guys, we're seeing a pretty bullish move. Notice how there are two key resistances here on the 5-day, 5-minute chart. One of them is at 920. This is stemming from the 24th, the 25th of this month, the 26th of this month, right around 920. And another big resistance at around 970 to about 990. That's a pretty big range, but right around there is where we topped off at on the 24th and the 25th. And notice how on Friday we took out 920 and we took out 960, 970. And not only did we do that, we held 970 as a new support heading into the close. We actually took out the highs. We went up to 1030, and we closed on a nice little upswing. So although Workhorse stock has gone parabolic, again, it's gone up about 1,000% in the matter of 3-4 months at this point. I think it still has some upside, right? You have to realize this stock has a lot of hype behind it, and there's a lot of volume. There's a lot of shares. Many shares are exchanging hands right now. There's a lot of hype. So for me, it's definitely worth watching. Am I looking at it as a long-term investment? Not yet, maybe as a spec play down the road, but I'm mostly focusing on it as a trade. I think there's a lot of potential, especially if we get a sizable dip. You know, we might not get a dip. We might rally straight to 11, 12 bucks here, but if we get a dip, maybe down to 8 bucks, $7, $9, that could be a pretty interesting spot for WKHS. And again, it's worth watching here. It's one of those stocks that it's just fun to keep an eye out on. And another one here, pretty high price stock, but still worth watching, is Adobe, ticker symbol ADBE. Excuse me, guys. So Adobe is one of those that honestly has seen a pretty big rally as well. Which stock at this point hasn't seen a big rally? That's the question of the day. Which stock has not seen a big rally? All of them have, and it's just a matter of which one has rallied more. So, you know, Adobe's gone from 250 up to 450. Now we're seeing a pretty nice dip, and if you guys watched my videos last week, I called out Adobe and I was saying, you know, 430 might be a decent entry point, but I think it's going lower, right? And now we're seeing it's going lower. It's down 2.3% on Friday. It lost about $10 of its value. And for me, I'm looking anywhere between 415 and 420 as an entry point, right? You guys can see this 415 point is an old resistance from back on the 17th of June, right? And 420 is right around that 50 SMA on this 4-hour chart. So anywhere in that range, I'd be happy to, quite honestly, to pick up some shares. And I'm not looking at this as a must buy because I understand, you know, we could see a further drop in the market. And let me give you guys another scenario here. So let's say we get a big drop in the market, second wave here, you know, S&P takes a 20% dip again. You know, ADBE, it could break 420 and maybe go down to 390, 385. That could be another entry point here if we see a bigger scale sell down. That would be down here to a previous resistance from the middle of February and also the 180 SMA. If we held that point, that could be a very juicy spot that would offer around 12 to 13% potential for profit back up to the highs of mid 400s. So ADBE, very, very solid stock here, whether we get it at 415 or 420, depending on if it holds there, or around 380, 390. I am very eager to pick this one up. And two video game stocks that I'm watching here, Activision Blizzard, ATVI, has been doing pretty well despite the markets being very rocky. Up 19 cents on Friday, up 0.25%. And take a look at what's happening here. This is very bullish in my opinion. We can see on this 30-day chart, we not only held 74.50 old resistance as a new support, right? We held that. Now we're looking to break out of $76.50 to $77-ish dollars, which if we do, guys, being a resistance, that could be the next breakout that we need to see to get up to about $79 to $80, which is the next resistance. If you guys can see here on the 3-year chart, we can see, okay, $75 again, that was a big support we held, and after that, the next range, the next gap to fill here is up to that $79 to $80 level. So from here, from here, $76.50 up to that $80 level is around 3.5% to 4%. So that is very, very appealing in my eyes here, especially, again, if we break $77. That is the breakout point that I'm watching for. Another video game stock, EA, at a very similar predicament to Activision, at a big resistance. In this case, it's $130 for Electronic Arts. And if we break this point, the next big gap that we can fill is mid-140s, low 140s, and heck, $150 is that all-time high. Who says we can't go there with another round of Fed stimulus and all this money printing that could end up happening here, and which most likely will continue happening over the next couple of years, right? I believe EA can easily get up to mid-140s, 150s, and maybe even take out those highs. So I'm watching EA, I'm watching ATVI like a hawk, and a couple of other ones here, guys. Facebook, a lot of big companies are pulling their ads off of Facebook and off of social media in general. We saw Starbucks is a big player that did that, and this stock, guys, got crushed. I can't remember the last time Facebook was down this much in a day. It was down 8%, and after hours, it was down another about 2%. So it lost 10% of its value on Friday. And I'll be the first to tell you, that was needed. This stock was overheated, maybe not as overheated as a Netflix or an Amazon or Microsoft, but it was still pretty overheated. So I'm happy to see this type of dip, and now I'm looking at it like, okay, when am I going to get into Facebook? Because we are getting to price points that are starting to get pretty attractive. 215, that's a pretty big level. We are dipping a bit below that right now. We went to about 212 after hours on Friday. Another big one is 200. So I'm thinking anywhere from 200 to 210, 215. This could be a general area to maybe pick up some Facebook shares here on the weakness. And if more companies continue pulling their ads off of Facebook, which could happen, right? Especially here in a in an election year, this thing could go lower. Who knows? Maybe 190s, 180s. So I'm watching it here. I don't know if it gets that low right now, but in general, $200, $215. That's kind of where I'm watching Facebook at this point in time. So another one here is Nvidia. And Nvidia is one that I like, anywhere between $350 and $365. You guys can see on Friday we held $365, old resistance, as a new support, which is good. But like the futures are showing, and like I said before, if we see a bigger drop in this market, like with Adobe, we might drop in Adobe and we might drop in Nvidia and in a bunch of other stocks. So 365 might not even hold. Quite honestly, we might actually go and test 345, 350, which I'm cool with, because if we test that point, being the 180 SMA support, that could be a very solid entry point here on Nvidia at about $350. And another one here, the seventh stock, is JNJ. Notice how it's not on an uptrend. I don't like typically trading these patterns here, this particular setup, but you can't deny that every time in this channel here that JNJ has hit the bottom of the channel, it hit a lower low, it's rallied up. It's rallied up to the middle or the top of the channel. So from here, 137, I could see, J&J maybe rallying up to the low 140s, mid 140s. That could be a move of around 4 to 5%, right? So watch and see what it does at this point. Notice how we're also at a pretty major support, right? You can see 136, 137 was a resistance back in October, back in November, heading into the new year. In March as well as in April, we were at a resistance at 137. So watch that to hold as a support. I can see a nice rally up again from 137 up to 143. Mark that in your books, guys. I can see this easily happening in Johnson & Johnson, and I'm personally waiting for this trade for this week. And it's already 8 p.m. This video is going to be a late upload today, guys, so I do apologize for that. So let's just knock out very quickly some bonus stocks here before I wrap up the video. Tesla's a major one. Watching it at 940, 960 broke. Seems like we're going lower, so 940 tomorrow and potentially 910. I would love to pick up shares of Tesla, 890 to about $900. Watch Starbucks here as well. Starbucks is getting crushed. Head and shoulders pattern, full effect right now, if you guys can see it here. So we might be going lower, but either way, Starbucks is a big blue chip company, blue chip stock that's not going anywhere. So this could be a pretty interesting spot for Starbucks. Another one I'm watching is NIO. NIO has been on fire. We saw finally some selling this past week. Will that continue? If we break 670, it might continue, but if we hold 670, this could be another opportunity to rally back up to the mid sevens and maybe even into the $8 level. So I'm going to wrap up the video here, guys. If you did enjoy it, all I ask from you is to hit that like button. I think the challenge was 400 likes. Let's try to hit that 400 likes on this video. Consider subscribing to the channel again if you haven't done so already, and let me know in the comments, what are your thoughts on the markets, these stocks, my picks in general. I would love to know. And if you guys haven't gotten your 2 free stocks from Webull, what are you doing? They're linked down below in the description box. All you have to do is deposit $100 and you get those 2 free stocks, with one of them valued up to $1,400. So I'll catch you all in the next video. Again, all the free links are down below in the description box. Thanks as always for watching. Stay safe, guys. Peace out.